So this almost sounds like it's not quite for your standard art enthusiast, someone who wants this hanging in their foyer or something. This isn't for them, right?
Yeah, exactly. It's not necessarily for your art collector because you can't really see the painting. It's more for your art investor, the person who is really looking forward to kind of invest in a piece, hold it, take care of it. Art, takes a lot of maintenance. You have to keep it within a certain temperature range to make sure that the painting and the paper doesn't degrade. And then wants to sell it again and wants to see a return on that. And so one of my favorite quotes from the entire article, right, is there's so many fees and costs and just uncertainties about this market right now that it really is for just the investor who is trying to, play with $1,000. What can I invest in $1,000? I don't know necessarily when I'll see the return on that. The art market is famously a very long art market. The average Warhol is held for 16.4 years. That's a long time. These pieces get to appreciate and stay in the hand of collectors and investors before they switch hands again. And so it's a fairly nascent industry. Masterworks, which is the company that, was one of the first to register with the SEC to sell securitized share of fractional ownership, only got that license in 2017, 2018.
So how much traction is this really gaining? Are people actually investing in fractional ownership?
Yeah, it's a small moving market. The art market as itself is it's a mighty but small pool of investors, There's not a lot of the works are bought by the same people, the same families, the same family offices. In 2022, it was about $67.8 billion of sales. The fractional art market, out of those sales in the last 5 years, so we're adding 4 other years in that metric, it's the last one that we have, was about 625 million. So we're really talking about less than 1% of the art market that is being sold fractionally. That being said, I think it's something that's coming up more in conversation within the art world and it's being reported on more. A lot because of this intersection of, blockchain technology. That is fractional ownership, you could argue, is a little bit easier done through blockchain. You think of DAO, decentralized autonomous organizations, owning, some of the most expensive NFTs that you've ever sold. That is fractional ownership, right? A group of investors come together and they all pull in however much in cryptocurrencies to buy an artwork. And then when they sell it, that kind of profit gets shared upon by that same organization. The key difference here, and I think is kind of one of the biggest points of contention when you're looking at blockchain versus non-blockchain offerings of fractionalized work, is that in a blockchain model, all investors get a vote on when to sell it and who to sell it for. So think about, a committee meeting, a vote that is put up, usually run by a smart contract, where everyone gets to say, yes, we want to sell it for this price. No, we don't want to sell it for this price. Yes, we want to sell it to this investor. No, we don't want to. In an off-chain model, all that is centralized. And so it is these companies that have the decision of when to sell or when not to sell. So you really have to trust that entity, right? And say, I trust that entity has the correct experts that will sell it for a price that will make it worth my money, that will be open to taking negotiations and to kind of continue that line of conversation, and that will actually pay me back more than what I paid to invest in, right? That you'll see some sort of return. With such a young industry, we talked about Warhol's being held for 16 plus years. This only has about 5 years. There really is no history there to see if, people will go back on their word or will actually follow through. There's been a couple instances of sales, but it's just a very, we're still on that very short side and beginning years of a very long process. Maybe we'll see, we'll check back in 15, 20 years and see if it's picked up and if it's really, an option for retail investors that are looking to, with whatever money they have, not millions, but maybe thousands, maybe hundreds, pop in. But we're still very much in the early days.
So what's the difference between fractional ownership and joint ownership?
So you go back to the origin, right? So you think about a joint ownership, joint patent, right? You and I created something. We now both get our names put in a patent. We own it together. Fractional ownership, there's an element of selling and buying. So we buy it from our third party, and now you own it and I own it, but we bought it from someone else. And that person can be, a singular person. It can be an entity, a company, a group. But I think it's the buying and selling really that differentiates it, legally at least, to joint versus fractional ownership.